start the show now with an exclusive conversation. Varun Beverages has been making headlines this week. It has been a stellar year for the company as it enters the list of the top 50 companies by market cap. Also, the company has informed that it's buying the beverage company in South Africa for 1,320 crores. Ravi Kant Jaipuria, the chairman of Varun Beverages, is here with us to talk more about that. Mr. Jaipuria, good morning and thanks a lot for joining in on the show. You know, it's great speaking to you at a time when your brand has created a lot of wealth for shareholders as well as, for consumers. So congratulations on another achievement, another acquisition that you've made. I just want to start by asking you about this particular acquisition and the kind of, leverage this gives you, both in terms of volumes, sales, EBITDA. What are you looking at over the next, say, 12 to 18 months?
Good morning, everyone. First of all, I think South Africa is a great acquisition for VBL, as it's one of the largest markets in Africa. Our acquisition today is what we have acquired is about close to 120 million cases, which is very small to South African market, but overall a huge volume addition to the VBL dominance. And it is about South Africa itself is about 40% of India market. So it's a huge market with a small population, which has a per cap, which is as much as 240 bottles. And it's going to be a great addition to the African market and to the VBL market for us.
Right, we get that. Thank you for detailing that. 120 million cases. That's about 15% of your overall own volumes, right? Is that correct?
Approximately, yes.
And what will be the addition then to your revenue and EBITDA? Because realizations of this business are lower than your overall company realizations. Can you tell us how much this will add to your revenue and EBITDA?
So this is a 12% EBITDA margin, South Africa at the moment. And the scope is huge there actually, because most of the volumes coming right now are from the B brands. And our own Pepsi brand, which is the peak brand, which is still very low there. So the margins are quite thin because of their own B brands selling major portion of the volumes. And we feel we can expand the Pepsi brand much faster. So there will be a huge upside which we are looking at in the coming years.
Could you
so when you talk about huge upside, right, just to take Mangalam's question forward, can you quantify it for us? What kind of upside are you looking at? I mean, you said that the scope is very large in markets like South Africa, but what would this add to your revenues as well as to your margins?
So it's South Africa business is about 1,600 crores top line at the moment with a 12% EBITDA. And we expect to grow at a reasonably fast pace there. So this should be, I would say it will add about 250 crores additional to the EBITDA margins to the India business.
All right, 250 crores EBITDA margin expansion is what you're witnessing. How will you fund this deal? I look at the cash on your books and the current investments. It's a little around 850 odd crores. This deal is over 1,300 crores. Will you be taking some debt on your books? If yes, by how much?
It'll be very small if we take, but it'll be funded from our internal accruals actually. So it won't be 1,320 crores will not really make a dent to the overall because the EBITDAs are large enough for our next year EBITDA will more than comfortably cover it.
Okay. I want to talk a little more about the South Africa business, right? Pepsi currently has a low single-digit market share in South Africa, if I'm not wrong. What is the longer-term game plan? What's the, Mr. Jaipuria, over the next 2 to 3 years, how much do you think you can take the market share up to?
Well, I wish I could really tell you, but fortunately, wherever we have taken a new country or a new territory, we've been successful in growing the market share. Right now, against our main competitor, I think Pepsi share is only 2-3%. So there's very little downside. There's only upside, and I believe to triple or quadruple this market share should not be a real challenge in the next coming years.
So tripling the market share in the next coming year should not be a challenge, is what you're saying, Mr. Jaipuria.
That's what I feel, but till we go to the market and understand it, but that's what we believe in, and that's what we've been able to do. But let's see what happens. It's a tough market also.
All right, I request you to, hang in there, hold your thoughts, because we don't get you very regularly. What we'll do is take a short break. We've spoken enough about South Africa. Let's come back, talk about the India business as well. You've entered into a slew of Capex programs in India. And on the other side, we'll probably slip in a couple of questions on Devyani too. Take a short break, come back, and we will continue our conversation with Mr. Ravi Kant Jaipuria. With Mr. Ravi Kant Jaipuria, who's the chairman of Varun Beverages. It's been a big wealth creator, not just in this year, but since the IPO, it's moved 18 times and moved in the top 50 market cap club as well. Mr. Jaipuria, you've spoken about the potential there is in your acquisition in the South Africa business, but what's taken the street by storm and literally over the last 3 years has been your energy drink Sting. For your India business itself, what do you see as the volume growth going forward, and how much will be contributed by Sting? How much does it contribute to your overall volumes right now?
Sting is about 10% of our mix. Now in 23, it is going to about 15%. So it's become a large mix for us. And I think going forward, we launched another variant of it, which was the blue variant. And that has also done extremely well for us. So I think Sting is still going quite strong, and it looks quite positive going forward in the year 24 also. And overall, I think we have always said that we are definitely looking at double-digit growths in India, especially since we acquired the territories which were East, West, and South, which were very lowly penetrated by Pepsi. And that's where we are increasing our go-to-market, and that is what is really helping us grow this market and develop it much faster than. And fortunately, this year we'll have a reasonably higher capacity also, because in 22 we ran out of capacity. So we have more than 45% capacity which has been added for the year 24.
Okay, in fact, I wanted to... Sure, go ahead.
Yes. No, also I just wanted to say that we are adding 2 dairy plants also in this, which is the value-added dairy, where we can make Tropicana and our Greenwell value-added dairy, which we didn't have. So those will also give us growth and higher value penetration.
Okay. Okay, there are 2 interesting things you pointed out here, so I just wanted to talk about that. I was reading a report which suggested that the household penetration of cold beverages in India has risen from 38% in 2019 and now at 47% in 2023. And, companies like yours, of course, will benefit from that over the years to come. So on the Capex first, you, of course, are raising your capacity in this year. But over the next couple of years, what will be the average Capex that you're looking to pump in? How much are you looking to up your capacity, in the medium term?
So if you see, we have starting 3 more plants this year, which is UP, Maharashtra, and Odisha. And going forward, we have already signed Himachal, Jharkhand, and UP. We are putting up another large plant. So in 25, those are the 3 new greenfield plants we are looking to start with.
Okay. What would the amount be for this? And you also said that you're adding 2 dairy plants to up your value-added products like Tropicana, etc. In this value-added segment, anything more that you're looking to do?
No, in this value-added segment, the Gorakhpur and our Maharashtra plant are already going to be added this year. And approximate value would be about 2,800 to 3,000 crores, which will be added for 24. And I would say a little less than that for 25.
All right, so 2,800 to 3,000 crores in terms of capacity potential would be added in 24, a little less than that in 25. How does your revenue mix look going forward, Mr. Jaipuria, now that you're entering, the value added, increasing your proportion coming in from the non-carbonated soft drinks business as well? What does your revenue look like, say, in a couple of years when it comes to contribution coming in from Pepsi brands, contribution coming in from something like a Sting, and contribution coming in from non-carbonated drinks, which is juice and dairy?
See, I would say on an average, there would be not huge changes because our carbonated soft drink is also growing at a huge pace. So even instead of dairy and juices declining, now I would say with these capacities coming in, we will be able to sustain it and maybe slightly add to the value of dairy and juices. Because the carbonated has been growing and we couldn't grow in the dairy and juices segment that fast because of the capacity.
And what does this increased revenue coming in from Sting do to your margins? Because it's a smaller SKU, but it sells for about 20 rupees, which would mean realizations are higher than Pepsi, right? So what kind of margins can we expect?
Well, I think our margins have been pretty high this year itself, even though we had a bad summer. So I think we can continue to look at what we have been showing, which is, I think, what, 22%, about 22, 23%, which is, I think, high enough in the soft drink industry. And if we can maintain this, we'll be quite happy.
Okay. Apart from value-added products, another way to increase margins perhaps is bringing in cost efficiencies. Would there be any cost-cutting measures that you're taking, something to perhaps increase your operational performance further?
Yeah, I think when your market grows, your overheads are not growing at the same pace. So you automatically are going to have that benefit of margins because your head office expense are not growing. And as long as you're growing in double digits and you're opening plants near to the demand, your freight cost comes down. So overall, it is going to be a very positive.
All right. I wanted your thoughts on a couple of things. One is because you are also running Devyani, and it's interesting. Varun Beverages is, is into Pepsi. Devyani is QSR, and recently you entered into the Thailand market as well by acquiring Restaurant Development Country. Can you give us a sense of, the rationale for this Thailand foray and how the performance in India for QSR was, because we're just coming off the World Cup?
No, India performance has been reasonably good, although QSR has been under some stress. But overall, we have been expanding because we see the market growing at a huge pace again in the QSR segment. So we are, I think, actually putting money a little ahead of the curve. So maybe that is one of the reasons why we are expanding faster than what we should actually. But we see long-term, our view is much stronger. And I think this will pay back in the long run. So we have been putting up restaurants much faster than maybe we should have. And I think that long-term will pay us huge dividends.
For Devyani, could you tell us what is the planned expansion or store footprint that one can expect, since you are moving faster than perhaps the industry is? Over the next 1 to 2 years, what's the game plan?
So we have been saying that we are looking at putting up, we will put up more than 250 restaurants in 2023. And we are looking at putting up another 250 to 300 restaurants again going forward. So that is the growth. We are practically long-term, we are looking at least opening 1 restaurant a day.
And on the Thailand foray itself, Street was worried that they would have much rather you use this Capex and grow the India business itself instead of going somewhere else. Thailand is, just one of the more emerging markets that you will go to, or this is just a one-off? What explains this? How much will this add to your business?
Well, 2 things. First of all, we are a debt-free company. So we are not a borrowed company. And our Indian business is comfortable enough, and even though this growth has been a little slower, that we are funding it from our internal resources. We are not borrowing to fund the Indian business. And the Thailand business will be capable. It has got enough EBITDA that India will not need to send money for Thailand. It can handle its own growth and its own growth potential with the own um, cash flows in Thailand. So, and it's a great market. It's a strong Asian market. It's a good middle class economy. And we see a huge upside coming in Thailand, especially once the tourism opens up fully, which has been subdued.
Oh, well, I visited Thailand recently and I must say that it's far from subdued. So tourism has opened up in a big way already. So congratulations to you on your recent foray there, and congratulations on the acquisition at Varun Beverages as well. All the best. As I said, as we started the conversation, your stock has been a big wealth creator for investors. Hope you continue to do that, sir. Thanks for joining in, and Happy New Year to you and your entire team.
Thank you. Happy New Year to you all of you.
All right. Well, that's the word coming in from Varun Beverages, one of the strongest movers, not just in 2023. Map a 10-year chart and you'll see the kind of gains that, a 5-year chart, and you'll see the kind of gains that Varun Beverages had. It's gone up 18 times since its IPO, and a big, big mover coming in there.
Big mover indeed. And the last 3 years have totally belonged to the energy drink string, which has aided their volumes. And the company says that next year their capacity increases by 45%. And that gives them further headroom for domestic double-digit volume growth. And what stood with me was, the increased potential coming in terms of market share for the South African business, with an additional 200 to 250 crores of EBITDA potential too. We'll take a short break, come back and focus on the markets.